Welcome to TradeTheMBA.com. This is John. This report is for the 30th of July as we're getting ready to end the month here. A little bit of softness, just filled back some positive extremes from the mid time frames. You can see we did get the breakdown of magenta, which just means tired buyers at the end of the month. Not a surprise, but no real short activity of any strength. We are seeing a move up here of cyan, but still, you got DOC red well above 7.5. We still have the positive extremes that went all the way back to right here. So that low in the 63 range, 40-ish, is about your target on the downside of things. But it's just a question of, how much actual selling there is, and it's going to be an option situation more than anything related to. Uh, we've got some soft earnings, but overall, things have been pretty much in line. And of course, you hear the little battles with the trade situation. They're still ongoing, and some haven't agreed, and some are in the middle of it. Um, but strong demand for U.S. Treasuries, which lowering yield there, which is helpful. It means that you've got the deficit pulling away some money from overall market conditions, but nothing too dramatic. It's going to be interesting to see what those numbers for July were and where we go. Coming forward, especially now that the big beautiful bill has been passed, and what do they do with the spending? I mean, are they going to have it under control? Is it something that the tariffs make up for? Those are still the unknowns. This is still your problem is oil, and you're not seeing any relief whatsoever. And that becomes a question. And they reached their capacity. The delays that were built in when Biden left, that we talked about before, are they starting to have a material impact now as demand and the improvement in the economy resulted in? I mean, this whole idea of the tariff narrative is sort of gone. Almost everyone uniformly now agrees the Fed is on the wrong side of the coin on this, but are they planning to do anything? Doesn't seem like it. Did Trump's impact on Powell in the visit scare him enough? I doubt that it did, but we'll see. That would be a huge bonus for the market, though, if the Fed did decide to lower, and whether or not there's more than one dissent as to what the readings actually indicate. Because are they intentionally slowing growth? Because that's what the reality of it is at this particular stage. The euro, of course, that collapse was expected. We have filled in all the positive extremes there, and the last ones before were already filled. So now you're just going to get into the decay of people realizing, wow, if the U.S. does lower rates, it's going to be even more attractive. You've already committed to buying trillions of dollars in U.S. products, so you're going to be selling euros to buy dollars. What does that tell you? It was always built into the situation. But narratives, they work. And that's how you move people to the wrong side of it and allow you to get to the other end of it. From a gold standpoint, just pretty much stabilizing, because if oil starts to heat up, though, I think that you'll see gold have another run, but still not, given these readings, is it ready to do anything to the upside at this particular stage. Bitcoin is just riding in a zero zone, doesn't have the same excitement that ETH is getting from the whole congressional action, because that has made a significant change in desirability for it, because if stable coins are okay, you're going to be building them on ETH. So yeah, more demand. We had talked about this the other day. We had the positive extremes that we knew were going to need to get filled back in, and that started to take place. And was pretty clean. Once the MBI white came in there, you're above the 50%. Once you got below the 50%, MBI white was still leading. That means a 0% move. And in this case, 0% was rising. I hadn't quite reached it completely yet. So your next move of the MBI white above magenta there on a breakdown definitely is going to fill into the zero zone. That's all pretty clean. And not a shock, given at the end of the month, there are people balancing the book, preparing for August, which could have a lot more potential than people think, simply because of this still unresolved situation with a lot of countries having uh, sort of negotiated. I mean, the EU, you're already seeing rebellion from some places onto the deal that Ursula made because the EU just got hammered so badly, but they don't have any choice. So, what are they going to do? Not doing it is going to be catastrophic for them. You want to see the euro plummet sub dollar. That's definitely the way to have them, fight it. They're not getting around that one. So you can see intraday was pretty much boom all the way down to the bottom, and then now, of course, the European session. Uh, Bringing it back up slightly from where it was, a little bit back and forth. But I think you're going to start to see that dichotomy between growth in the U.S. versus other places, and that is going to create significant uh, demand for dollars over the others. And so all these people have always talked about the dollar demise, and that I wish they understood real economics and the interrelationship between other countries. It's not a binary situation where it's by itself. That's the whole point of even our indicators. It's all relational, and that derivative of the deltas between these relationships matter, and that's really what impacts how the markets move. And you're just looking for those imbalances, and that's why they call the S&P a mean reversion, because that's just a coherence that gets back to a stable midline based on new information, and that continues to evolve. So you can get ready for August indicators coming up. I'll be having those sent out so that we'll be all ready to start as the new month begins. Anything relevant, I will put it on our team chat. Have a good one. Trade well.